Have you ever wondered how to turn a stock market crash into an opportunity? Most people dread market downturns, but with the right strategies, you can actually benefit from them. With over 20 years of investing experience, I've weathered multiple market crashes and come out stronger each time. Today, I'll share how you can turn market turmoil into a chance for growth. Types of market declines. There are three main types of market declines. 1. Market corrections. These occur when the market drops by at least 10% from its peak. They're fairly common, happening roughly every 1.2 years. Think of them as a natural adjustment when the market gets too high. 2. Bear markets. These are more severe, with a drop of over 20%. Historically, they happen every 4 to 5 years and last about 9.6 months. Bull markets, on the other hand, tend to last longer and offer more prolonged gains. 3. Market collapses. These are rare but extreme, involving a drop of over 30% in a short period. They can be triggered by significant events and are harder to predict. 3 phases of a market crash. Understanding the phases of a market crash can help you prepare and potentially profit from the downturn. Here are the 3 key phases. 1. The Euphoria Phase. During this phase, the market is at its peak and optimism is rampant. Everyone is confident prices will keep rising. I've seen this before crashes like the 2008 financial crisis. Back then, consumer spending was high and the housing market was booming. More recently, the NFT craze was another sign of excessive enthusiasm. Here's what I do during this phase. Minimize risk, avoid chasing high returns. Focus on steady, reliable growth. The tortoise and hare analogy applies here. Slow and steady wins the race. Reduce leverage, avoid borrowing to invest. If you use leverage, you risk margin calls if the market drops. I prefer to avoid this risk entirely. Save extra cash. Keep a significant amount of cash in high-yield savings accounts. It might seem counterintuitive during a boom, but having liquidity prepares you to seize opportunities when prices fall. Diversify investments. Spread your investments across various sectors to mitigate risk. If one sector crashes, others may still perform well. Investing in broad index funds helps ensure a balanced portfolio. 2. The reckoning phase. This is when the market starts to crash and panic sets in. Many investors rush to sell their assets. I experienced this during the 2008 crisis when my hobby store saw a sharp drop in customers. Here's how to handle this phase. Stick to your plan. If you've done your homework and believe in your investments, don't let fear drive you to sell. For example, Peter Lynch held on to Kaiser Industries stock during a downturn because he understood the company's fundamentals. The stock eventually rebounded. Invest regularly. Use dollar cost averaging, where you invest a fixed amount regularly, regardless of market conditions. This approach helps you buy more shares when prices are low and fewer when high. Look for bargains during a downturn. You can find great investment opportunities. I took advantage of the 2008 crisis by purchasing undervalued stocks and businesses. 3. The Phoenix Phase. In this final phase, the market begins to recover and often surpasses previous highs. After the 2008 crisis, recovery took time, but businesses started hiring again and consumer spending picked up. Here's what to remember. Cash is king during a downturn. Having cash on hand allows you to invest in opportunities as the market recovers. Be patient. A recovery takes time, but investing in a diversified portfolio consistently can lead to substantial gains as the market rebounds. Final thoughts. While market crashes can be unsettling, they also present unique opportunities. By understanding the phases of a crash and preparing strategically, you can not only navigate the downturn but potentially come out ahead. If you're new to investing or want to learn more about getting started in the stock market, check out my video on the basics of investing. Don't forget to subscribe for more tips on building and growing your wealth. Thanks for watching, and I'll see you in the next video.